Hi everyone, welcome to Zunova, and in this video I'd like to introduce you to a new module, the AI Index Scan. It is like the other clustering scans we do for tech indicators and alpha and volatility. In this one we're using 10 different indexes, and we're using 3 different indexes as Blackrock factors actually. So we first do a factor analysis, and then we use that information or that data to incorporate into the Birch unsupervised learning model. We also use bonds, Dow Jones, Gold Index, NASDAQ, S&P 500, Total Stock Index, and energy. So you get a pretty good coverage of all different types of commodities, bonds, so for interest rates, and different major stock indexes. So what you would do is you'd come in here and you could initially use any of these levers to query the different clusters of stocks that fall. Let's say in this case, if we looked at quality, value, and momentum for Blackrock factors and we refreshed, we could then find under quality, value, momentum, Blackrock alpha, which stocks are generating the most alpha. And again, these percentages aren't reflective of the actual alpha, but the high cluster that they fall into, that they are generating a lot of alpha against those factors. So as simple as that, I could also go in here and I could say for SPY 500, let's look at medium return, which stocks fall in those clusters, and we can see here there are a number of different stocks. And if I scroll over to SPY 500, we can see that that falls in the cluster of 168.51%, and all the other stocks that fall within that same cluster are in here, and that's roughly 21 different stocks. So it's a nice way to query and look at the different clusters and how those stocks are basically generating alpha against those different indexes. And here you can see that going across, and as you scroll it will also predict the price for a given stock from 1 day all the way out to 1 year. I'll scroll across and you'll see those different predictions, and it's not only predicting the price, it will also predict if there's any alpha, and using the S&P 500 as the underlying index, any alpha being generated at that point in time. It will also calculate the probability of this stock returning alpha. On the short term, 3% or greater. On the longer term, 10% or greater. And you can see those probabilities here of generating alpha. There are then charts, and you can actually see the price predictions going out. Blue is historical, red is projected. You can also see the probability chart of generating either 3% or greater or 10% or greater. And then you can also see the historical accuracy charts of how accurate have the projections been against the actual prices. And you'll find that for some stocks it may not be that accurate. You'll fall into 80, 85, 90%. But for some stocks you will find it to be very, very accurate. If I go back here, I can also query by stock or by portfolio if I want to. But let's say I take Apple. I use Apple as my target stock and see what's clustering around Apple versus the different indexes. You can see Apple is the first one here, and I can then see all the other stocks that have the same clusters for alpha returns against different indexes. And there are 780 entries that fall within that same cluster as Apple, excuse me. And as I scroll across, it does the same thing, generates price, alpha, probability, and charts. And I can see the chart for alpha for probability, about 53% out here for 1 year out. You can see the accuracy for Apple is about, from 1 day out to 2 weeks, is about 97.37%, or a mean error rate of 2.63%. Also, a chart here can show you what the differential is between the actual Apple price versus the forecasted Apple price, and what that differential is. So again, a very powerful new tool added to the Zenova platform for querying different stocks versus the underlying indexes and using alpha as the return. Hope this helps. Thank you.